Welcome back to Market on Close. Time to talk one of the best performing asset classes of the last several years, but not so much today. That, of course, being gold. Joining me now is Quentin Mai, the CEO and director of West Point Gold Corp. Quentin, thanks for joining me here on this Friday and taking the time. Let's talk things gold. Obviously, a lot of reasons for optimism in the shiny metal over the last several years, but it does seem to have made a bit of a turn recently. What do you make of gold markets as a whole and maybe the recent trade?
Well, I think what we should all essentially caution ourselves is that we don't look at any one kind of social or a geopolitical event as the general story, like a painting where you don't have one brushstroke that creates a piece of work, an artwork. In our situation, we've got a tremendous amount of long-term drivers of gold that are very much intact, starting with unsustainable rise in sovereign debt, ballooning deficit, increasing money supply, which is causing dollar weakness, interest rates, trade tensions, tariffs, inflation. Take your pick. Any one of those is going to have a much more significant impact on the price of gold long term than a settlement between Israel and Iran.
So when you keep that in mind then, and you think about it from the long term and the position that it can have in your portfolio, whether overweight or not, it certainly has a long run. Some would say one of the longest runs in terms of proving its worth over time. Is this simply an opportunity then for those who maybe don't have exposure to potentially think about scooping some of this stuff up?
I would wholeheartedly agree, because I firmly believe we're in an inflection point in history right now with respect to gold. We've had a lot of years where gold has been almost a forgotten asset for the almost 10 to 15 years that I've been involved. In the recent kind of 24 months, maybe 18 months, the price of gold has just shot right up. And essentially what's going on right there is that as an asset that's giving you long-term stability, gold is the best performing asset out there over the past 18 months. It's now got a very strong base at around $3,000 per ounce. And when you're looking across the board of the industry, most companies produce around $1,450 to $1,500 an ounce. So when you're looking at a $2,000 gold price and you're making $500 an ounce, and we're talking tons and tons of gold, you can see that the gold companies are making the cash flow from them in the last 12 months is, I think, something even a lot of them haven't foreseen. And they're going to be out looking for ways to generate more deposits and more discoveries as a result of that.
It's generally kept up with even things like the NASDAQ in terms of performance over the last several years, but it does so with a lower volatility as well. So really nice kind of Sharpe ratio components to it. My question to you, though, is I've always kind of looked at this asset class, and I hear your points as to why it has its role, but almost like this break glass if necessary. It's like the catch-all ultimate risk off. For that reason, as someone who's watched this market for a long, long time, does it require a different level of patience, just knowing that it's there when you need it, but you don't always need to just get caught up in every price move?
I think it correlates to any investment. As soon as everyone's into the trade, you're probably too late. And I think what you're wanting to do is just allocate a portion of your portfolio to gold so that you're actually being able to cost average yourself in around the fluctuations, but always buy on weakness. And a day like today, where you're actually getting closer to the support level of 3,200 an ounce, these are the days you should be actually looking to accumulate, because as soon as the geopolitical events start to stabilize, people are going to be saying, okay, now what's driving gold? Oh, it's the sovereign debt, it's deficit, and the U.S. and the weaker dollar. So all these things are going to start to come into higher focus. So I certainly think you should be looking for opportunities to accumulate.
And when you say accumulate, are you talking physical gold if you can? Is that the purest way to be exposed to this marketplace, or things like paper gold? I know there's tons of exchange traded products, or even gold futures to get exposure. But is physical gold the way to go from your perspective?
Actually, I would say definitely you're going to want to look across the board at what you have essentially tolerance for, because remember, if you buy physical, then you've got to store it, and then you've got to find somewhere to secure that gold. But if you're buying the GLD, for example, which is a correlation to the gold price, then you don't have to do that. You can do that through your broker. So it really just depends on what kind of level of security you're able to hold for the gold.
And when you look beyond gold, if you look at things like silver, platinum, they'll get excitement, every once in a while as well. They don't have the same, they have more industrial use cases in some cases as well. Do they serve the same role in your mind, or are the other reasons people buy those products just cloud the picture too much?
I would say it clouds the picture. I think, if I could bring something else from outside the commodities and talk about Bitcoin, you're looking at other things that people are using essentially as an alternative value to the fiat currencies. And so when you're looking at gold, you've got a situation to say, okay, this is my stability. The US dollar falls, I've got my gold position. The US dollar has fallen against every other currency. So if you've got gold, you're actually maintaining the value of your investments much better. Platinum doesn't do that into the same degree. It's not perceived, as you mentioned, it's got more of an industrial usage or what have you. So the forces are more driven by, I would say, supply and supply demand being for industrial purposes and whatnot. Silver, of course, you can use as a kind of a little brother to gold. But I think there are still a lot of industrial uses of silver that you don't certainly see with gold.
Let's talk kind of the comparisons to Bitcoin, and I guess Bitcoin wanting to be considered this digital gold. Is that a threat to the gold market, or is it just simply more ways to kind of introduce the reasons to have gold to a new audience? Because it seems like a lot of the really staunch Bitcoiners will preach a lot of the same things that you're describing as reasons to own Bitcoin, as reasons to hold gold. Do you see that as a reach across, or is it a threat to gold's use?
Well, you're raising the point that's probably the most hotly debated issue in the gold industry right now is, are gold investors migrating to Bitcoin or are they not? Quite honestly, I think what both are showing you and anyone that invests is that there is a demand, a very big one, for non-fiat currencies that people want to hold regardless. And there's always going to be money there and investment there for things that are alternative currencies that are not perceived as being quoted as controlled by central banks or governments. So people are looking for alternatives. I don't think anyone is either better than the other. And I think there's definitely, what this is showing you is that there's a market for both.
Quentin, thank you so much for taking the time this Friday and joining me. You have a great weekend, and we'll see where gold goes from here. That's Quentin Mai of West Point Gold Corp.